In the first hour of trade, U.S. stocks are trading relatively flat following the key employment monthly data that we got. It came in line. Unemployment remains at 4.6%. Now, this is the reason why investors care about the employment data. It's the most comprehensive report on how many people are looking for jobs, how many have them, what they're getting paid, and how many hours they are working. So these numbers are the best way to gauge the current state as well as the future direction of the economy. Now, since President Obama took office in 2009, the economy has added over 11 million jobs. And this is following unemployment peaking at 10% back in October of 2009. So we've really seen a big increase in the employment situation here. The obvious question is, what's the next catalyst for markets outside of the inauguration on January 20th? Now, the S&P 500 had a pretty good start to 2017. And now we're adding a bit to 2016's nearly 12% gain. So the focus is going to turn to fourth quarter earnings and whether the bar has been set too high for the quarter or more likely for the 2017 outlook. Now, consensus sees an increase year over year. That would be the second consecutive increase in quarterly earnings for the S&P 500 index after 4 quarters of declines that began in the third quarter of 2015. Now, analysts, they believe investors are pricing in a beat for the fourth quarter. That in and of itself isn't a problem as long as investors don't anticipate a greater than average beat. So really what we're looking at right now is the strength of fourth quarter earnings and if that 10% rise that we've seen since the election is justified in stock prices. From the NASDAQ Market Site in New York, I'm Jill Malandrino, and this is Africa 54 Business News.